Hey YouTube, it's been a while since I recorded my last video, and so I wanted to sort of move away from technical analysis for one, and then sort of look at like general investment and personal finance tips for a bit, right? And so what I've been doing for the past maybe 2 to 3 weeks is sort of look at how I've structured my investments for the last maybe 18 months. So I've been buying open stocks for maybe a year and a half. So I started roughly a little bit after the COVID crash. Where so by that point in time, a lot of people had already made a ton of money because of how the market in India rebounded. So the Nifty corrected all the way down to like 8,500, and then we went on this insane bull run all the way up to 18,500 and thereabouts. But then we're sort of now consolidating right now. So a lot of people I knew made a ton of money, because what they did was they generally bought fundamentally very strong stocks when the market corrected, and then they just held it throughout, and they're still holding on to it, and they're all sitting on profits of like at least 40-50%, right? And I was a bit late to the party, so I currently now and again, all the stocks that I bought were basically recommendations, right? So they'd be recommendations from friends who are like, this is a good stock to enter, this is a good price to enter, and go ahead and buy. And I'd listen to those recommendations. I'd watch a bunch of YouTube videos where influencers would say, this is a good stock, profits have risen consistently over the past these many quarters, and this is a good price to be buying. And I would go ahead, look, at the most, the only check that I probably do was to check if the stock was at support, and I'd go ahead and buy those stocks, right? And maybe the amount of money I've made or my returns have been sort of held back by the fact that I didn't do my own research. So I was just blindly buying stocks based on people's recommendations, right? And I wanted that to change. And so and thankfully, a part of the research that I did was I read a ton of books on personal finance and how to pick stocks. And I think there's like a dearth of books which give you perspective into the Indian market. So you can read books like The Intelligent Investor and Warren Buffett's treatises on investment, but they are very specific to the US stock market, which is like a very mature market, and a direct comparison with India doesn't exactly work. But I was lucky to get my hands on a book called Coffee Can Investing by Saurabh Mukherjea from Merciless Investments, right? And I think I saw him probably a couple of YouTube videos where, so his investment philosophy as such makes a lot of sense. So what they say is that you don't look at price fluctuations on the day to day. What you do is you buy fundamentally strong businesses, as in clean businesses which don't cook their books, and businesses that generate a return on capital consistently, and they reinvest whatever profits they get back into the business to generate further return on capital, right? And so this again makes a lot of sense, and this isn't pure cliched, how do you call it, sharing of gyan, as we say it in India. So whatever the recommendations that they do give in the stock market is backed by years of data. So the theories are sort of back tested at least 10-15 years, and that was enough for me to sort of get hooked onto the concept. And this concept of coffee can investing at least makes like a ton of sense to me. And so there's like a couple of basic filters that they suggest to be looking at companies, and these are companies that for 10 years have returned a return on capital of at least 15%, and which have grown their revenue by at least 10%. And this these values are hard coded in the books. I probably going into why they chose these specific values will take a lot of time, and it's there in Coffee Can Investing. I'll probably add the Amazon link in the description to the video. Great book, and I recommend it for anyone getting started in the stock market or just trying to arrange their personal finances. So let me jump straight into screener.com. Okay, let's probably do this from scratch. So this is a great tool that I use for all my fundamental analysis of companies. I know a lot of people prefer ticker tape, but I find the UI better because it feels like you're typing an SQL query in, right? And having worked in analytics for 5 years, this feels like home. So basically you have to come to screener.in, you have to create an account. You can, generally log in using your Gmail, and then you have to come to this section called tools, right? And then click on stock screens. And then there's possibly a few filters that you can apply to start filtering stocks. So the first one that I'll add is market capitalization greater than 100, right? So this is value in crores, and we're basically filtering only companies that have a market cap of more than 100 crores. So we don't want to look at tiny companies where they're generally much more volatile. A small movement in Nifty can send these stocks spiraling downwards. So it's always safer to invest in companies which have a certain market cap. And what were we looking at? Average return, right? Average return employed of 10 years. Yep, greater than 15. So we don't have, field for profits at least. I'm just going to add, we don't have a field for revenue growth in this, and I didn't notice this in ticker tape as well. So I'm just going to use sales growth, right? And then I'm going to filter for 10. Okay, that works. And just check, I'm going to do a bit of cheating. So I'd sort of already run this query. And okay, set that here. There's another field that I'd added. Okay, profit growth 10 years. Cool. So I've already typed that out. I'm just showing you guys how to build it from scratch, right? So, and what else am I looking at? Okay, average return on equity as well. Right. Let's just run this now. And this returns a list of companies, right? And you have like around 50 companies right now. And this is the base upon which you'll do your further analysis, right? And okay, I think we forgot to add like one parameter here. And I want to basically look at companies that have very low debt, right? So debt to equity is basically the liabilities that the company has divided by the total equity. And as long as it's less than one, your company is probably a safe bet. But I want to be ultra safe here. I want to look at companies that have like really tiny debt. And let me just run this query again. Now I have this master list of like 33. Wait, let me check here. Is it 33 here? Yep, it's 33. So I basically reproduce the same query here. And you now have this list of 33 companies which meet, all criterion that Saurabh Mukherjea has mentioned in his book. Now, the next thing to do would be to go into each of these companies and then do a little bit of further investigation, right? So you can come here, you can see that it has a market cap of like 233 crore. It has an all-time high of 1026, and it's currently at like 800%, right? So that is like a correction of about, let's say 20% roughly. And yeah, it's trading at a bit of a discount. It's actually at the 200 daily EMA right now, which could be a good entry point. And this company is Amritanjan Healthcare. And then just have to sort of scroll down. Sales have gone up in the past couple of quarters. Let's look at year-on-year sales. Yes, they've gone up. 253, 2020 could probably be attributed to COVID here. And then we've seen an uptick. Operating profit is increasing again. Profit before tax has gone up in a big way. But the most important parameter here again is to sort of look at cash flow of companies. So Saurabh Mukherjee's thesis says that companies that have a rich cash flow can ideally, that are rich in cash, can invest this cash back into their business and earn returns, right? And if you look at this, cash from operating activity has gone up consistently year on year. Net cash flow right now is negative for the past couple of years. This could be because of maybe the company investing in R&D or something else. We'll have to probably deep dive into that, but cash from operating activity has gone up year on year, which is a positive. And right, this is probably how you deep dive into companies, and then you can filter basis this, right? And So this is generally your master list of 33 companies which meet your coffee can selection criteria. But I'm going to sort of add a few further filters, right? So this is basically we've basically looked at just 10-year historical performance of the company, and we're drawing assumptions on it. I want to add a little bit of weighting for recent returns, right? So what could have happened was maybe 8 to 9 years ago, the company performed like really, really well. It grew profits by maybe, let's say, 60, 70%, but it might have tapered off in the past, right? So I want to account for those sudden drops in uh, profits or sales as well. So how I'll go about doing that is I'll add these ratios into my query. So along with 10-year or 7-year comparisons of sales growth, I'll also compare for the last 3 years and last 5 years as well, right? And I'll just add those here. And then average return on capital employed, I'll look at 3 years, 5 years, and 10 years as well. So this tells me that companies, even, over and above having historically good performance, they've had very good recent performance as well. And I'll do the same for average return on equity as well. 3 years, 5 years, 10 years, and then profit growth, 3 years, 5 years, 10 years as well. And then the same, uh, you know, filter on debt. So let me run this query right now. And this gives me a much smaller list of companies to be. And lo and behold, we have Amrutanjan Healthcare again. We have Alkylamines. We have Jyoti Resins, which is like a small company when you compare it to the others on the list. So it's like 529 market cap of 530 crores. So a lot of room to grow, ideally. And you have Likita Infra, you have Dr. Lal Path Labs, which is like a part of their consistent compounder portfolio, and great stock to hold. You have Astral, which Saurabh Mukherjea recommends as well. You have PI Industries, which is a good stock. You have ICICI Lombard, which is a good stock. And then there's a couple of smaller companies which maybe you'll have to do, sort of dive deep into. So again, what I'd recommend is you open each of these companies, you look at whether profit has grown year on year, whether sales have grown year on year, and then you also look at net cash flow statements. So let me scroll down. There's an easier way to scroll here. Let me, where is it? Yep. Okay, cool. So you look at profit and loss, and you can see that sales have consistently gone up year on year. Operating profit has increased consistently year on year. And then let's come down to the balance sheet. So liabilities have sort of gone up, but maybe, the company is just taking loans to finance R&D. And then you look at cash flows. Cash flows have gone up, pretty consistently. They've almost doubled, let's say, in the past 1 year. Net cash flow has gone up as well in a big way. And yep, so if you look at promoter holdings, they've gone down a little bit the past couple of quarters. We'll probably have to look into that, but everything else looks really, really good for Alkylamines, and it's at a discount right now. So all-time high was at like 4,400, and right now the stock is close to 3,000, and it's below the 200 daily moving average. So purely from a fundamentals point of view, this is a good price to enter. Not buying advice. I'm just, sort of looking at what the charts tell me. And yep, so we have this list of 14 stocks, and the coffee can principle basically says that you invest equal amounts in each of these stocks. So let's say you have like a lakh to invest, you divide equal, let's say 1 lakh by 14. So the calculator here. So basically, you have to invest, let's say, roughly 7,000 in each of these stocks, and then leave this untouched for like 10 years. And the hypothesis is that, this entire portfolio will compound at least 15 to 20% a year, and you'll make like really, really healthy returns. Cool. So that was it with regards to the coffee can portfolio. And I hope this was helpful. And, please drop a subscribe or, share this with your friends. Definitely helps. And I know like very few people watch the channel right now, but hopefully this grows, right? And onwards and upwards. So yeah, thank you.